welcome back to another tuition video. So for this one, I'm going to be going over knee-jerk reactions, and I've obviously used this in some of my analysis, but I haven't really showed you guys what a knee-jerk reaction is or how you can basically use it to get time confidence as well. But it's also like it's all fair and well, you know what price point you're looking to enter, but it's also good to know in terms of time what kind of period you should be looking to enter your trade. So this will kind of clear that up. And for those of you who trade during the Asian the Asian session, this will basically clear up why you should kind of wait for more prime times to take your positions. So let me actually just write out a few key points of what a knee-jerk reaction actually is, and we'll get started. So basically, what it is it's an enticement of the quote wrong side of retail traders just to just to reverse against them. Okay, knee-jerk reactions also take out people who have bought or sold prior to the reaction. Oh, why is that all in capitals? You know what? I have to keep that like that. Reaction. And yeah. So let's actually also outline the session times, because this is also going to be important. So this is in GMT. The London is usually 8 a.m. start, and you know what? Yeah, 4 p.m. it finishes. And then the New York is 12, and the New York Stock Exchange opens at 2:30. So that's also going to be a period in time we're going to look at. So these are obviously all the key points, and now let's actually get into what a knee-jerk reaction is. So let's say we got price consolidating, right? And this usually occurs in the Asian market. So let's say prices, going through a sideways consolidation kind of trend. So let's mark that out. So let's say this here is our London Open. Let's mark this out. London Open. Oh. Right. So there's obviously those traders who are kind of trading in like a breakout structure level, where basically they're expecting price to like break below this point, retest and drop. So you got those kind of people prior to the move, where they got like their sell orders below price, and they obviously have to take profit probably up here because they don't really know what they're doing. And you also got people in this region who are just generally like buying and selling, and you got these people who are the same way they're expecting a breakout to the downside. You got people who are expecting a breakout to the upside, so they buy, and let's say they got their stop loss below this level, and they take profits like up here. So let's see what actually happens. So during the knee jerk, okay, cool, missed something out. Let's say we have a inefficiency within here. So price has obviously created some inefficient pricing, and we've come down to this level, right? So this is obviously the price point where you're looking to enter your trade here. All right, like so. So what usually happens is upon London Open, right, price can literally just dramatically drop, and maybe there's like an inefficiency in the past. Now you could take the trade this way, but I'd prefer to take this one. Not because of anything in particular. Like, I have taken these kind of trades before on London Open, but you kind of tend to get more clarity as price arrives here, and I'm going to show you why. So let's say you got the people who, now these traders here who set their sell stop below price, their trades are all activated and they're in a little bit of profit right now, okay? And upon this move, there's obviously those traders who trade the open, so they see a volatile move and they start to sell with like probably scalp this all the way down, higher lot sizes, right? So when this inefficiency is tapped, what happens is price actually rockets to the upside. So now all these traders selling, their stop loss is hit, right? And now these buyers, their buy orders hit. Okay. Now what tends to happen is at New York. Oh, let's push this a bit higher. Let's say this is New York. New York session. Right? So this is obviously the knee jerk. This is the knee jerk here. This is a reaction, right? And you get the same thing usually at 12 or 2:30, depending on whenever it tends to happen, where price will literally come up. Now tap the inefficiency, and you obviously oh sorry, let me just remove that. It'll be at the New York, so we'll come up, right? And then we'll have no corporation. This is just an example. And we'll tap this inefficiency. In this case, it would be the fill. And this is where you take your trade, right? Like this. Your, stop could be just above that high. Take profit down here. Nice 1 to 20. And then price literally rockets to the downside. And now all these buyers, they've been taken out now. Here's a stop loss. So now they've been taken out as well. Okay. So do you see how the manipulation happens? We're enticing sellers here, and then we reverse against the sellers. And then this move here, we're enticing loads of buyers just to move against the buyers. So this is obviously that prime position, because after that, what kind of happens is just a minor retracement, and then we continue the downtrend. So I'm going to show you some real examples of this. Now, hopefully that didn't really confuse you too much. Yeah, let me just show you some examples. Okay. You know what? This is also going to be a breakdown of this week's Euro GBP. So essentially, let's look to this region in the left to kind of see and understand what happened, and then we'll get into this price action over here, right? So let's actually come back all the way here. We had a initial point of interest that was tapped, right? We purged sell side liquidity. Yep. And we didn't obviously close below, so that was literally just a liquidity grab indicating a reversal. And then we obviously had price come up, mitigating something in this region here, right? And probably on the second time frame we could see that a bit clearer, but we don't have that. And then what we had was this inefficiency fill here. Let me actually make these bolder so you can see that. Entry, we had an inefficiency there, and we had another inefficiency here, and obviously that's where we had this strong reaction. So we know within here somewhere we obviously got a nice sponsored candle, and if you go to the 3 minute, I believe we have that there. Yeah, I mean this looks good, the 1 minute looks good too, so we could actually just take it upon this 1 minute candle here. Okay, now let's actually get out of replay. Zoom out. Oh, that's current time. Okay, let's go back up here. Yep, here we are. So this is where our new point of interest was now, right here. Bang. Now, obviously, price was let's actually zoom into this region here. So where's Asian? Okay, this is in the morning. Okay, bang. Okay, Asian's here, right? Let's actually get the square. 11 p.m. So let's actually just mark out this entire Asian what do you call session? Okay, boom. So London starts obviously here. Yeah, right here. Okay, now look at this. So prior to London starting, we literally dropped down and we took out all the sellers in the Asian. Look, even these equal lows here, they were taken out too, right? Now, whoever was waiting for this breakout obviously got taken out. Look, price came back up and obviously hit their stop loss, so they got taken out. And look, so now we're gonna get the buyers. The buyers are all in here, and literally the same thing. Look, what happens? Price goes up into a little bit of profit, comes back down and hits their stop loss. So that's where the knee jack happens. Now look at what time this is. I mean, sorry, this was at 9. right? So this is where our sponsored candle was hit, and after that we have a break of structure to the downside here. Let me actually remove that. Get the usual one here, right? Give me a second. And we obviously had a inefficiency fill up here. I'm just going to mark out rough estimate of the 50%. Bang. And then we had a break of structure here. Now, if you look at this, oh, sorry, it's my little brother. If you look at this price action over here, right, this is at 12 on the dot. So this would have been your ideal entry here. So what you see price did with break structure, we obviously got some slow effort, some high effort to the upside, slow momentum. And look, we had that inefficiency fill and the liquidity purge up here. Look, that literally purged it by just a wick. That's strong no cooperation to the upside. And look at this reaction to the downside after that breaking structure again. So look, when the knee jerk happens and price is moving to the upside and it taps your POI and moves to the downside, you're expecting this. You know this happens, right? And now look, at 12 on the dot, so 12:03 here, we literally had this inefficiency fill and no cooperation. So I knew somewhere within this whole price leg, we obviously had a sponsored candle. So this is obviously a blind candle because we can't go lower than a 1 minute. When you mark out the 50% of that, that would have been your ideal entry, literally just after 12. But look how time plays an important part. You get this window within the London and the New York, which is obviously right here. Nah, just missed it. Right here. You get this window where you're basically expecting the move to happen. And look at this, clear market structure, right? Move to the upside. We had last point of structure there. We came up, we failed to break structure and create new structure to the upside, and we had a strong BOS. Look, that's not just a few candles here. That's a strong break of structure there. And we came back up. Obviously played the move here with no liquidity and cooperation. So no cooperation. Moved to the downside, and you could have had your entry here. Now let's actually go further on. Let's go to the 3 minute. So you come back here. Okay. Wait, hold on. I believe, let me actually replay this. Let's go here. 2 minute. Okay. Look, we had 12:30, which is right here, is the New York Stock Exchange open, right? So let me actually just move this higher because that is annoying. Here we go. So right here was the New York Stock Exchange open, right? So we had no cooperation, blind candle mitigated. You know there's something within this price point that we're going to come back to get. Obviously, look, break of structure here. Price came back up into this region here. And this is where I took my entry, right? I didn't really get a BOS. Price came back up, literally purged this high, and then fell through. This gives me no reason to close the trade. Yeah, I went into drawdown, but the fact that there was no cooperation actually gives me a reason to hold. And look, I took my sell position right here. Had my stop loss above this candle here. So it's only 4.5 pips. And I rode this down to the downside. Look how much of an important role time plays. So this is obviously your let me actually mark these out so it's a bit clearer for you. London session. New York session, and finally New York Stock Exchange open. So these are obviously the times you're expecting the moves to happen. They're kind of like key points in time where traders are basically, they have access to the markets and they can there's obviously more liquidity, and that's when these moves tend to happen. They also tend to happen during like high impact news events. So let's say the US elections, for example. let's say price was obviously in this region and we've got election news and price comes down, you can actually find a reference point in the past where that move's likely to happen. Or let's say it was NFP, you can actually catch, let's say that hit, you can actually catch the false move. So you can catch the end of the manipulation and catch the real move, for example. And in this case, obviously, price actually ended up moving to the downside, which is why I kind of said at the beginning why I like to catch this move more, because this is kind of like the more long-term one. And I have caught these before, but they're all going to be short-term trades. So that's pretty much it. This works with like all the pairs on like every, how do you say, across like the board. So this works in particularly well with like US 30, so you can trade that as well. Let me see if I have another example actually. What time is this? 7:30. I'm trying to find an area where we have strong. I mean, if we look here, we obviously had a sponsored candle mitigated here, right? So price fell to the downside, and look, we had a inefficiency fill here, and this happened at 2:15, 2:30. So you know that prior to the market open, you're going to get a false move to your market open, and then obviously a reaction. There was a better example in here somewhere that I'm trying to find. Just give me a minute. Nah, took the whole day. So I'm just trying to find an example where this worked really well. Let's actually replay this and go here. 2 minutes. Yeah, here we go, perfect. So let's actually look at this entire price action over here. Yeah, look, we obviously had a inefficiency fill right here. No, sorry, I think it was something within, I think it was this inefficiency fill. Yeah, so this was the inefficiency fill. I'm not too sure what this, I'm not going to look too deep into what the actual price, the reference point was there, but more importantly, look, we had the Asian, oh, let me just move that back. We had the Asian session within here, and look at, what time was this? 8 is right here. At 8, we literally start to make a dive for that liquidity, false move, right? And then when it comes towards 12, prior to 12, we have another false move, look, and then literally look, 12 on the dot, right? Literally the candle before, so 3 minutes prior, we literally had the mitigation, tap DNF, and drops to the downside. And that's how you could have this whole, what is this, 80 pip move. So yeah, that's basically knee-jerk reactions as a whole. I hope that basically made sense. I hope it didn't confuse you guys too much. But if you guys got any questions, feel free to ask me. Feel free to let me know. If you want to send me examples of this for me to give you feedback on, also, feel free to do that. But yeah, besides that, thank you guys for listening, and on to the next.